Well, welcome everybody again to today's webinar. My name is Alex. I am the head of the support department here at Aplos and have been for a long time. For a brief period of time, I took a detour and began our services department, which we'll hear from someone there in just a second here. And so in that kind of career trajectory, I've dealt with a lot of customers, and on the services side, got into building the team that now services that clientele in doing bookkeeping, as well as migrating folks from other software solutions into Aplos. So one of those software solutions that people come from is QuickBooks. And so that's what we're talking about here today. It's kind of overall, what are some tips to keep in mind when you are migrating from QuickBooks to Aplos? So we're going to talk about a number of things here today. And joining me is Brandon Burkhardt, who works on the services team. And about 5 years ago, 2016, actually in November of 2016. So yeah, right about 5 years ago, I started that department, made a couple of hires. Brandon was among the first hires into that team. And now he continues to work on that team and has become kind of a senior member and leader in that whole kind of realm over there. So Brandon, I'm going to throw it to you. Why don't you introduce yourself and kind of give folks a little history on yourself and what you do.
Sounds good. Hello, everybody. Like Alex mentioned, my name is Brandon. I am a part of the services team here at Aplos. Specifically, for about the last year and a half to 2 years now, I've been mainly working on implementing and migrating people over from other softwares over to Aplos. And so one of the main softwares that we see people come from is QuickBooks. So like Alex mentioned, today we're going to be discussing if you are currently using QuickBooks or have been using QuickBooks as a solution to your accounting and are looking now to switch over to Aplos, what are some tips and tricks to getting everything over smoothly to make sure that you guys have a seamless transition over to a new software. It's been crazy seeing the services team build so much in the last couple years, and a lot of it has to do with the fact that we offer a service to move people over from other softwares. So I'm interested to hear your guys' questions, and we're happy to help you guys throughout this transition.
Yeah, a couple of So a couple of housekeeping notes before we jump into the content here. This webinar is being recorded, so if you, and I believe everybody that registered for it in the first place will get an email automatically once the recording has been rendered and is available online. So if you need to duck out a little bit early or just want to share it with somebody or watch it again, this is going to be available forever. And if you don't have that link or would like it, just let us know and we can send that to you. Also, Brandon and I are going to talk for, I would guess, somewhere between 20 and 30 minutes. Probably not going to use the full hour today, but we're going to do our spiel and then open it up for Q&A for just the last 15 or so, however many more minutes we have available after that. So as you listen today, as we go through the content, feel free to put any questions that you have into that question field, and we will do our best to answer everything at the end. And then if you have any additional questions after the fact or that are off topic, you can always reach out to our support team here using support@aplos.com or our phone number there, as well as if you are logged in the software, there's a little chat icon on the bottom right. It's not a live chat, it's called intercom. Think of it more like a text message conversation back and forth, where you send it a message, and then as one of our folks is available, they'll respond. You will then be notified in the software or get an email update, and then you can pick up on the conversation and go back and forth. So that is another option. And we are available Monday through Friday, 6 a.m. to 6 p.m. Pacific Standard Time. Okay, so what we're going to cover here today is first we're going to explain the difference of fund versus standard accounting. So kind of starting at a high level, what is the kind of the core difference between Aplos and QuickBooks, or really Aplos and a number of other solutions? Why is the accounting that we do different or unique or important when you are evaluating these two systems? We'll then walk through what might be some common stumbling blocks of using QuickBooks for churches and nonprofits, likely some of the things that if you are currently using QuickBooks, you may already be bumping up against. And so we can talk through some of those. And then we'll get into we'll start going through some tips and best practices of moving from QuickBooks to Aplos, and then we'll have that open Q&A at the end. And today's gonna be pretty casual, so as I talk and Brandon has a thought, he'll jump in and vice versa. So we're just gonna kind of go through it top to bottom, And again, if you have any questions, just shoot them in that question field, and we'll do our best to answer everything for you here in a little bit.
Yep.
All right. So first, let's talk through fund versus standard accounting. Okay. So again, starting at a very high level, if you've been exploring Aplos or you've started to look into accounting software for a church or a nonprofit or a governmental entity, you might have run across this term of fund accounting. And why that's important is nonprofits, churches, and government entities have a unique brand of accounting and reporting needs, and that differs from businesses. So in fund accounting, you have this concept of having money that has been given to you through some sort of means, whether it be a donor or a grant or something, but for the most part, you now have a responsibility to say, okay, thank you for the money. We now have to hold that aside for whatever purpose you gave me the money for. So speaking in terms of a church, just to use a very basic example, if someone says, hey, here's a check for, $1,000, and I want that $1,000 to be used for your missions outreach stuff, whether it be local or global or whatever, I want this money to go towards, missions outreach things. And then you say, okay, thank you for the money, and you deposit the money, and then you use that $1,000 to pay rent or buy pizza, one of those things, that would be frowned upon and, illegal for the most part. But that's kind of the concept of fund accounting, is you have this responsibility, this stewardship to say, okay, you are wanting to give us some money, we need to set that aside and then use it as allocated, as appropriated. And also be able to report on that and show you, hey, we have used your money in this way, or we've raised this money for this purpose and we've been stewarding it properly. There's no, monkey business there, and be above board. So really, it's a brand of accounting that focuses on accountability rather than profitability. So as we're going to name drop and talk through QuickBooks a lot today. Just as a quick preface, QuickBooks is a fantastic program for businesses. If we were talking through what software to use for a small or medium-sized business, I would not pitch Aplos as an option. It doesn't mean that it can't be used, it's just not what it's designed to do. So QuickBooks is a software, much like lots of other accounting softwares, that focuses on this business demographic, and therefore the features that they focus on and the workflows are designed around profitability and managing a business. Whereas with churches and nonprofits, you have things like donor records, you have these things called funds, and then you have lots of other functionality that are kind of unique to that demographic, and all that focus on kind of accountability and managing money properly. So you need a system that has been specifically designed to do that, and that is what Aplos does, is focuses on the fund accounting. And that's just another bullet point to say, systems typically are designed to reinforce the above. So if I'm trying to build a software program that is going to, put the power into my customers' hands to generate more revenue and, decrease expenses and increase your margin and that kind of thing, I'm going to design my features around that. That's going to be different than I need to give somebody the tools to track money as it's come in, set it aside for a specific purpose, report on it, provide accountability reports, that kind of thing. So Aplos is a system that has been designed to do this concept of fund accounting. And everything I just said might seem like a semantic. You probably have people that are involved, or you might even be the type of person that says, yeah, but can't you just use QuickBooks for a nonprofit or a church and make it work? Well, the answer is yes, kind of, which we'll get into here in a second. There might be some common stumbling blocks that you'll run into in trying to make it work for a nonprofit or a church. But again, if it hasn't been specifically designed for your type of entity, then you will probably start running into some barriers there and encounter difficulty moving forward.
Right, and to add on to that a little bit too, Alex, so one thing we commonly see with bringing customers over from other softwares that are either not designed to do fund accounting or might have the verbiage that seems like it's set up for fund accounting. Like I know QuickBooks has a nonprofit version, but one of the major stumbling blocks that we see with people coming over from those softwares is that they had to do some weird or funky journal entries or some sort of transactions that were forcing the system to work towards fund accounting instead of letting the system already be set up to make you successful for that accounting for each of the funds that you're setting up. So even though, like Alex mentioned, you can still technically use those other systems, there's just going to be some roadblocks and some workarounds that you have to do. Whereas in our system, we've set it up specifically to where that's just how the system functions. There's no workarounds. There's no adjusting journal entries or weird journal entries that you have to make to force the system to work. So,
yeah, and that's a good segue into what are maybe some examples of this. So, what might be some stumbling blocks or some some issues or some workarounds that folks might be implementing in QuickBooks to make it work for a church or a nonprofit? So I'm just going to kind of shoot a couple of these ahead so that way you can see kind of the total list of what I'm going for here. But up top, it's kind of a reminder. So first, keep in mind that the system has been designed to reinforce profitability and not accountability or other demographic specific needs. This is potentially off topic, but a good example. We often get folks that want to use Aplos, and they, every once in a while need to lean very heavily on a feature that maybe we just don't do as well. So case in point, and I'm undercutting our software here a little bit, but we have the ability to create invoices. So you can have accounts receivable, you can create invoices, you can send those invoices to people, manage all of the open AR, and it's designed well, but really that is kind of the extent of the functionality. Whereas QuickBooks has an extremely robust invoicing system to where it's very well built, but that's also because they are designed around small businesses that are trying to generate revenue. So that whole revenue invoicing collection and building of invoices and managing all of that, that is a core, cornerstone of what they build to. So when people come to us and say, do you have a massively robust invoicing system? The answer is no, but that is part of our accounting system, to a certain degree, but that's not necessarily a pillar that we kind of position ourselves on. Whereas for a for-profit software, it would be, right? Because that's kind of the point of a for-profit software. Our pillars are different. So that's just an example of the systems being designed specifically. So what are some of these common stumbling blocks? So I've got 3 here, and Brandon can fill me in if there's any more, but most commonly when people use QuickBooks and they start evaluating Aplos, we see 3 primary things. One of which is using classes for funds. The other is over leveraging their chart of accounts design, which I'll get to in a second, and then forcing equity adjustments. So again, from a high level, fund accounting, as kind of classically defined in the accounting standards, is a fund is a self-balancing set of accounts, which means every fund that your organization needs to track must have its own assets, liabilities, equity, income, and expense. So by its very nature, it is almost its own little standalone mini entity within your larger total of your nonprofit or a church. So where QuickBooks might say, hey, you can totally use us for tracking nonprofits and churches. What they would then recommend is all of those funds that you need to keep track of, use what's called a class. Now, classes are very powerful. You can use them for a lot of things, but they are not an equivalent of fund accounting because classes can only be used for income and expense activity. There is no system check and balance to make sure that your debits and credits are in balance by class. That is just not something that they do. They basically say you can, record a transaction, use whatever accounts apply, and then also attach a class to it. And then you can kind of further categorize that activity. So you can run reports, you can have a budget, you can do a lot of reporting, but at the end of the day, you can't log into QuickBooks and go and access your bank account and it tell you, hey, within your bank account, you might have $10,000 in there, but how much of that $10,000 is set aside for that thing that someone gave you money specifically for, right? So then how do you make decisions, right? So how do you know how much of your cash on hand is really usable? How much is unrestricted? How much is donor designated versus non-donor designated? Can I go purchase a piece of equipment or hire somebody? Do we even have the cash to do that? Or are we dipping into specific balances of money that we're not necessarily allowed to touch for this thing that we want to do? So making those decisions becomes very difficult and hard to get to if only using classes for funds. Jumping maybe down to the third bullet, what I see kind of also paired with this using classes for funds thing is people will then create the divisions of equity to account for the lack of fund accounting. So they'll create equity accounts to say, here's my, missions equity and my building equity and my, general equity and my youth equity. And so that way they can post and kind of force journal entries to go through the fund accounting motions. But that again, then what it forces you to do is track everything using a class, figure out how much activity has happened, and then go make an adjusting entry to then increase or decrease equity and update your balance sheet so that way you can keep everything straight. And again, what I'm hoping that I'm doing is making your eyes just slowly go a little bit cross-eyed. And that's kind of my point, is using something that is not designed for fund accounting is extremely difficult to, try to force manually and use if it's not designed to do so.
Right.
And then the last one here is just, yeah, go ahead,
Yeah.
Brandon.
To add to that, another way I've seen as sort of a workaround that organizations have used in other softwares to track those funds, other than classes and, like Alex mentioned, forcing equity adjustments through your balance sheet, is I've also seen orgs set up funds as liabilities. So that's another thing that if you find yourself as an organization setting up these areas that people give to specifically as liabilities, that's also usually a sign that you're not in a fund accounting system. And with liabilities, I understand the position there. In a sense, you do have an obligation to spend that money in a certain way, but with fund accounting, funds are not technically liabilities as a part of your organization. They actually are just separations, like Alex mentioned, almost like these mini entities that make up your overall organization. So those are something to look for throughout your own accounting system. If you do find yourself, having to force adjusting entries to get certain accounts to line up the way you need them to track your fund balances, or if you're using liabilities to track those funds, or some other type of method like classes or any other sort of labels that the software that you're currently using. In any of those scenarios, what you're doing is workarounds to get the correct balances. So, with our system, the way it's set up, there's no need for workarounds when it comes to tracking the actual fund balances.
Yeah, that's kind of that third bullet there of over leveraged in the chart of accounts. And what I mean by that is, your chart of accounts is your kind of foundation that you're laying to keep track of everything. So you go through and you create your account listing as well as maybe your class listing in QuickBooks, but those end up being things that you label transactions using, which then build your reports. And so if you don't have the ability to track something through a class, or you need the detail in a different way, a tendency might be to then add it to your chart of accounts. So to Brandon's point, adding funds as liabilities, you might think that that is, money that we've received. It's not like fully ours. We kind of have an obligation to spend it in this way, so we're going to count that as a liability. I've also seen it a lot in creating more assets. So one of the things we see from QuickBooks users, and it's a clear indicator of QuickBooks, is having a checking or like a bank account with sub-accounts, and each of the sub-accounts being the individual fund balances of the larger checking account. So, and this is kind of hard without using like a physical example, but just in your mind, if you think of kind of row one being the checking account, and then row 2, 3, 4, 5, 6, whatever, being these sub-accounts, each of which have their own kind of fund balance there, all of them sum into the overall amount in your checking account. However, that becomes super difficult to manage, because now what if you need to split other assets up? Now you need to split your assets up for those funds however many times that you need to, however many different assets that need to be tracked like that. It also makes reconciliations a nightmare, because now you have one bank statement, but you now have, 10 different asset accounts, all of which the activity are, on the same bank statement. So how do you possibly reconcile that? So again, I've seen a lot of different workarounds, seen a lot of commonalities there. These are just some examples of how people might be using QuickBooks to, force it to work for a church or nonprofit. Now, with all this in mind, if you are a small nonprofit or a church, it's probably worth mentioning, it may not make much of a difference. If you don't have a lot of funds, If you don't have any funds, if all you have is just a general fund or a general fund at another fund, if it's pretty streamlined and pretty basic, and your operations are not large or complex, and I mean large and complex as in you are super small and probably just getting started or just don't have a lot of requirements there, you might be able to get away using QuickBooks just fine. So what I think we're taking on is, as you begin to have this thing called fund accounting, and you have multiple funds in play, or you're trying to track donor receipts and do some other kind of nonprofit or church related functionality, having a system that's designed to do it is beneficial. So eyes fully crossed. Let's again, if you guys have any questions on this or anything else, or if you even have use cases of what you've been going through and want to just kind of run it by us, feel free to drop those in the question field, and we'll get to those here in a little bit. But let's now talk about, so let's assume that we now have a good understanding of at least there's value to having a fund accounting system versus a non-fund accounting system. So let's use the right type of software, right? And maybe we've touched on what might be some current issues that you've been running into using QuickBooks for your nonprofit, or maybe you're shopping between Aplos and QuickBooks trying to make a decision. Now that we've sufficiently maybe spooked you out of maybe using the QuickBooks route, let's say that you're using QuickBooks. Now, how would you make that switch to Aplos, and or what are some things to consider when moving from one system to the other? So for this one, I think I'll let Brandon, if you want to, I don't know if you want to take point on this one, I'll kind of jump in, but these were kind of my notes here. But yeah.
Yeah, definitely. So making the move to another software can be complicated, but we do have a couple kind of main points to focus on when you are moving from QuickBooks over to Aplos, or from another software over to Aplos, or just switching softwares in general. So first bullet point here is determining the best time to move. So normally we would recommend that you choose a time frame that makes sense. So for instance, let's say you are coming up on a new fiscal year, whether that's a calendar year, or if your organization has like a mid-year convention where it's July to June. But that typically is a good time to move softwares, is in a transition period between one fiscal year to another. Similarly, it would also make sense to move softwares at, like I said, a time frame that makes sense. So like the beginning of a new quarter, the beginning of a new month. What you would really want to avoid is moving softwares like mid-month, or just in the middle of a quarter, or in the middle of a fiscal year. And the reason behind that is mostly to do with how you would like to pull reports in that new software. So if you have partial data that you're bringing over, then you're only going to have partial reporting in that new software or new system that you're switching over to. So that's really the first step to moving softwares, is determining, hey, this is when we plan to switch everything over from QuickBooks over to Aplos, so that we're ready to go up and running with that new quarter, that new fiscal year, or just that new reporting period in general. Second bullet point here, so make sure you have the right chart of accounts for the future. So a lot of this has to do with the stumbling blocks that you're seeing in your other softwares, whether that's creating these unnecessary accounts like Alex mentioned, whether it be sub accounts to asset accounts, or duplicates of accounts. Like in QuickBooks you might have had to have 5 different office expense accounts for your 5 different funds, whereas in Aplos, because you're moving to a fund accounting system, you can now have a single office expense account, and then you'd be able to assign the fund to that transaction when it comes time to enter it. So it is a good opportunity when you're switching softwares to reevaluate your chart of accounts, make sure that you are entering in a new chart of accounts into Aplos that you're comfortable with moving forward. And then it's also, an opportunity there to clean up what you are currently doing, especially if you have accounts that you weren't using on a regular basis, or accounts that were created by accident, or just were not accounts that you used at all in your prior system. That would be a good time to remove those unnecessary accounts. And then it's also a good time to think through, okay, on our new chart of accounts in Aplos, what are those different funds or those different buckets that people give to specifically, so that you can have those set up in your Aplos account and you can start posting transactions and tracking the balances of each of those funds.
Yeah, a quick note on that one too. I end up, Brandon and I have worked together quite a bit, and I think him and I are probably two of the most experienced and knowledgeable folks as it comes to chart of accounts design in Aplos. And we are big, I'm speaking, I guess, for the both of us, but correct me if I'm wrong, but I'm a big proponent of people designing their chart of accounts in Aplos tailored to what Aplos can do. And we're going to get into the data migration here in a second, but I use the illustration with people that if you move houses and then you go to the new house, you plan to arrange your furniture in the exact same way as you did in the old house, that might work if you have the same general layout. But if the layout's completely different and you start putting couches and TV and whatever kind of in the same format, it's going to be awkward, right? It's not really going to work very well. So I'm a big proponent of, you're in a new house, let's take a look at what dimensions we've got. Let's really make sure that we are designing things using accounts and funds. And we have something called tags, which is similar to classes, but there's other info there that we can send you. But we have all of these, categories that we can use to really, make sure that you can categorize things properly going forward. So I'm a big proponent of a lot of the time starting fresh, but at the very least, coming up with a good design that makes sense in Aplos, and that's something our services team can help with. But I'm a big, I don't know how else to say that. I'm a big fan of redesigning for the future and not necessarily bringing in kind of old mentality or some methods that may have been adopted by using a previous system. Aplos is kind of a fresh start, and a lot of the times it's really beneficial to go that direction.
Definitely. Yeah, I would agree with that. And, I always like to remind clients of ours that it might seem like a lot of upfront work, but if you really do take the time to develop that chart of accounts that fits Aplos and fits your organization, in the beginning, it's just going to keep you from having issues later on down the road. So it might seem like a big task to handle at the moment, but like Alex mentioned, when you take the time to really build out that chart of accounts, it's just going to set you guys up for success in the future as you start to really dive into the software. All right, great. Yeah, so this next bullet point, this might be a common question for you guys as you are deciding to move is, should we make a clean break, as in stop in one software and pick up that next day in the new software? Or should you migrate your historical data from that prior system over to your new Aplos account? And my recommendation for this is it always depends on, once again, that time you decide to move over softwares. So it goes back up to that first bullet point. So typically, if, let's say, for instance, you decide to switch softwares in the middle of your fiscal year, well, in that case, it might be useful to have that prior 6 months of the fiscal year that's already passed in a new accounting system, so that when you do pull your reports, you can pull the full year's information. You can go back and look into transactional history if you need to for that beginning of the fiscal year. And so it just adds in some more detail into your new Aplos account. The one thing to be careful in that scenario is if you are making significant changes to your chart of accounts from your QuickBooks account to your Aplos account, then it might be difficult to then translate those historical transactions into your new chart of accounts and into the new accounting system in Aplos. So my recommendation is, if you're making significant changes to your chart of accounts, there is still a way in Aplos to set starting balances as of whenever you are moving over softwares to Aplos, and it might not be necessary to bring over all of that historical information into Aplos, which kind of leads into the next point, which is if you do plan to make a clean break, which once again, that just means, hey, we're going to finish out this month in QuickBooks, and as of the first of the next month, we're going to start up an Aplos. So if you are not doing the clean break, or even if you are, it is always recommended to have some sort of access or some backup files from your prior system so that you can still reference those historical reports. You can still reference those historical transactions. If any questions come up during an audit, if your organization gets audited, there's that paper trail back to, hey, this is the system we were using before. This is what our reports looked like prior to when we switched over to Aplos. So you can see the transition and how things flowed during or after that transition process. So yeah, it really depends on how important that historical information is to have in the same system. So once again, your reporting is going to be kind of the main focus when it comes to that historical data migration, but we do have several import options into the system if that is a route that you guys decide to go. So there are several reports from QuickBooks that I've found have been pretty common when it does come to migrating over data from other systems. So if it interests you guys at all, basically the reports that we usually request from customers in order to move their data over from QuickBooks would be like a general ledger export from their QuickBooks account for the time frame that you would like to migrate. That general ledger export should have all the debits and credits for each of your accounts, whether they're assets, liabilities, equity accounts, income, or expenses. So that gives you the full picture of what you're bringing over. From there, depending on how many changes you made to your chart of accounts, you might have to build a map from your prior chart of accounts over to what your new chart of accounts should look like in Aplos. And my recommendation would be just to do that all in Excel. And from there, we do have a journal entry import option for any of you guys that do plan to bring over those historical transactions. So if you do have questions about where that importer is, how to format your information, that's something that you can definitely call into our support team here, and they can help walk you through what at least the template needs to look like after it's filled out.
Yeah, and really the advantage of bringing in prior year data into Aplos is for the comparative reporting. So if from Aplos you want to be able to run a report for last year or 2 years, or you compare 2 years against each other, again, that's kind of the advantage of bringing in data, is that you've got it all in one place. But that typically then assumes that you have a similar, if not the same, account structure as the old system, which may or may not be the case. I mean, we've had plenty of customers where whatever they were doing previously translates pretty well into Aplos, and so we don't necessarily need to make sweeping changes, maybe just tweaks or something, and so it works just fine. Other times it's like an overhaul, so it's almost not worth it at that point. But again, it just kind of depends, and our support team can talk a little bit about it. Also, I was going to have maybe Brandon, if you want to maybe run through the different kind of options that the services team usually provides in that front, different levels of implementation. But
sure.
That's something we can always kind of speak into and at least take a look at and say, okay, well, here's what you're currently with, here's what, the Aplos version might be. So let's talk through whether it'd be worth, bringing it in and converting it, or just leave it where it is. You wait for a clean break, at a quarter or 6 months or fiscal year turnover. And then if you do have access and a backup to the historical data, then you can always go back and view the reports from that system. And you don't necessarily have to bring it in at that point. You can kind of, have the continued access, but start fresh on the Aplos side. But yeah, Brandon, why don't you walk us through kind of, so let's hypothetically say somebody wanted to move and, use the services team to assist. What are the different options there?
Sure. Yeah, so we do offer several different variations of bringing over data in different ways. So one option we have would be kind of a full-fledged data migration, which is all the transactional history. So every transaction within the time frame that you would like to bring over, that is something that we do offer as a service. Once again, that definitely depends on the complexity of your old chart of accounts versus how it's being built into your Aplos account. So, you know, the more changes that are made between QuickBooks and Aplos, you know, the more difficult it is to put the puzzle together, but it is definitely still something that we offer. Another option that we offer that's a lot quicker and to the point, but without as much detail, is that we do offer a monthly journal entry data migration in a sense. So what we basically do with those is we take your reporting from your prior system, so like your profit and loss statement from QuickBooks or your balance sheet from QuickBooks, and we basically plug in those amounts via a journal entry into your Aplos account so that your monthly reporting is still correct, but there's not the transactional detail behind that. And that tends to be a little bit easier, especially if there are a ton of changes from your prior chart of accounts to your new chart of accounts, because you're not having to figure out the mapping between every transaction that's being moved over from QuickBooks to Aplos. Instead, you're just worried about those report totals. So that is a kind of a second option that we have when it comes to having our services team perform that data migration for you guys. And then kind of as a third option, which this is getting a little bit more into the donation side of things versus just the accounting side, but we do also offer a donor data migration in a similar fashion to where we can bring over all of your donor history, or we could bring in lump sums for each of your donors into the year, which is not necessarily recommended because typically on like contribution statements and whatnot, you want to be able to show the full donation detail. So those are kind of the three options that we have. So we have like the full transactional data migration, we have a journal entry data migration, and then we also have a donor history data migration as well.
Yeah, that's a good point of clarity too. You know, most of what we've been talking about today is the accounting records of things. So if you do want to explore Aplos and think that a clean break would be good, but you're thinking to yourself, we have, 20 years worth of donor history and contact, lists, and that is all different than the accounting records. So we can bring in donor data and donor history completely differently than we do the accounting. So that's a good point of clarity there.
Sure.
Alrighty, cool, Peter. Yeah, so that's pretty much what we wanted to cover here today. We kind of started at a high level and explained maybe what the difference of fund versus standard accounting is, why that is an important thing to consider, and then also maybe some stumbling blocks that you might be running into using QuickBooks at the moment, and or if you were exploring that. Hopefully we again pointed out a couple of things that would be down the road for you potentially if you did start to use QuickBooks. And then went through some tips and best practices on moving from QuickBooks to Aplos. If you guys have any questions on this, again, as you have anything, if it relates to what can Aplos do, what are the features of Aplos, how can we use this for our org, then feel free to contact support. If it's related to what is pricing or what kind of solution is best for me, then I would go straight to sales. And then if neither of those work, then we can point you to maybe a services rep and get somebody else involved. But I'd say those are kind of the two contact options. But and then if you have anything specific for me, feel free to email me at alex@aplos.com, and I'm happy to clarify any of this for you. But we are just about out of time, so I'll go ahead and close it up. I don't see any other questions. So if you do have further questions, or if you think of something later, again, either email me directly or our support or sales team, and we're happy to clarify. And thank you to Brandon for taking the time. I know the services team doesn't do webinars, but he's done them in the past, and he's good at them. So we wanted his expertise on today's session. So thanks to you, Brandon, for taking the time.
No problem. It was a pleasure tuning in and giving what little advice I have to give. So it was a pleasure talking with you all.
All right. Well, yeah, let us know if you have any other questions. Thank you for taking the time, and have a good rest of your week. Take care, and thanks for using Aplos. Bye.